So where do I even start today with the conversation? Let's just say the word Bitcoin to get things started and the word crypto. I know that's like the talk of the town and everybody's getting rich and 2021 is replaying itself real time for us. And the Bitcoin halving's coming up in May of 2024 and everyone's really excited. And when I'm filming this right now, for perspective, it is March 12th, 2024 and Bitcoin has just passed 72,000. It's an all-time high. Now, I'm on record of investing in Bitcoin, and I've been investing in Bitcoin, dollar cost averaging that is, over the last, let's call it 3 to 4 years. So I've been very consistent every single week, investing a little bit in Bitcoin, keeping a pretty small allocation of my portfolio. In total, my goal is about 2.5%. Obviously, with the recent rise in Bitcoin, it has grown as a substantial piece of my portfolio, and I have no reason to sell it at this point in time. So I'm going to start it off by saying that, but I'm also going to bring in the idiot comments I'm seeing online and how silly people are acting. And it's investor psychology 101. It's a tale as old as time. Something starts getting a lot of hype and everyone jumps on the bandwagon and everybody gets burned and they learn a little bit then and there. They go back to reality. A year or two goes by, they forget what happened and the same story spikes up again. And it literally continues to happen forever. And it's always happened. So the quicker you can understand that this is going to continue to happen down the line, the quicker you're going to realize, hey, you can actually build wealth without being an idiot. So I've been seeing really hot takes online. Let me see one. One recently said that you should be investing 40% of your portfolio into crypto, not Bitcoin specifically, but just crypto. To say the least, that's pretty silly. And let me also clarify, even if it turns out to be a winning formula, at this point in time, as we're speaking, as investors, as we are trying to hit our financial goals with the investments that we're making, that is flat out stupid. And anyone that thinks that's a good idea has no business speaking finance in general. That is somebody either trying to sell you something, get rich quick on the back end, or there's some other agenda behind that, or they're just flat out stupid. Because even if you put 40% in and, you literally picked it, let's just say it's all Bitcoin and things look great long-term and 20 years from now, you look like a genius. What I will say is the whole purpose of investing is to hit your financial goals. And I think a lot of people, especially novices, don't understand what they're even in this game for. They're just like, hey, let's make profit. Let's make a lot of money, blah, blah, blah. Like they're just running around with their head cut off. Zero valuations, zero understanding of how a business works, zero understanding a stock is actual equity in a company, zero understanding of all the fundamentals, invest in what you understand, stuff like that. Like all of the fundamentals are out the window. And all these people, and I'm very on the record as well saying this, and I think Bitcoin's a cult. I think there's like while I invest in it, I have a little bit in stake there. I think a lot of people are gravitating towards this because they didn't get picked on the playground. Let's just put it that way. And they're finding their cult or their group that they finally fit in. They're a bunch of internet nerds. Let's be honest. That's exactly what it is. And again, like this is coming from somebody that actually has invested in Bitcoin, actually supports the idea of it. But at the same time, I have a lot of speculation on it and there's a lot of unknowns. And I understand that. And I position myself accordingly within my portfolio. So with the recent run, yeah, I've seen a pretty substantial increase and it's been undeniably very nice. And I would never deny something that potentially could come in the future, but I'm also positioning myself, like I said, about 2.5% of my portfolio. Now with the recent rise, I don't know exactly where I'm at, but I don't have any intention to sell it because if you understand the fundamentals of Bitcoin, you aren't going to sell. It's literally a hedge. So you're literally using it as a hedge versus reallocating your portfolio or selling a portion because there's a scarce, limited supply, let's call it, right? 21 million Bitcoin all the time. So I'm never going to sell my portion and I'm always going to be dollar cost averaging, at least for the foreseeable future. But this is investor psychology playing out 101. And we've seen this so many times in my short time of investing over the last decade. We've been very spoiled. I think over the last 15 years, I saw a stat recently that we were about 16% average annual return in the S&P 500 over the last, 15 years. Now that's not normal, to give you guys any bit of context historically. Usually it's about 10%, let's call it. And with small windows, let's call it 15 years, which is a fairly small window in the big, grand scheme of things. You'd be amazed at how many people forget the bigger picture and understand that, history doesn't always repeat itself, but it does rhyme. And what's happening current day with the Bitcoin craze is exactly what's always happened with any craze. We've seen it with the .com era. We've seen it with the marijuana era. We've seen it with the housing industry at times. We've seen it with crypto in 2021, which is very recent. We are now seeing it with AI technology. And I'm never one to say that those things don't have merit and those things don't have great use and value down the road. They absolutely do. And I think all of those things I just listed all have significant value in many ways. But here's what happens from an investment standpoint where people forget. Typically, those industries are thematic, like they're packaged as a thematic investment product, whether it be a thematic ETF, thematic mutual fund. And what happens is there's a heavy expense because somebody is actively managing that. Somebody and a fund manager is managing that fund. They put together this investment product. They go invest in a bunch of AI, companies, a bunch of marijuana companies, a bunch of, let's call it crypto adoption technology companies, blockchain, whatever it is. And what happens with any booming industry or new industry is there's a lot of losers in the industry. We've seen it with the .com era. We've seen this play out real time. And I think we're experiencing that again in a different way. And again, it's not .com again, but it's the similar hype, craze, emphatic, euphoria. No one can lose money. And we're living that real time. And the quicker you understand that, the more cautious you're going to be from an investment standpoint. Do I think crypto will be the future? Tokenization will be the future. Blockchain will be the future. AI will be the future, without question. Like it's pretty foregone. It's been a foregone conclusion in my mind since I took a training at Deloitte in 2017 on blockchain. Like it was a very obvious thing coming into the industry, especially with Deloitte being at the forefront in 2017. And so when I hear this stuff, it's not to say I'm against this stuff. It's how you position your portfolio, because we always want to go back to how we think as investors. I think how we think as investors are what drives our results long term, because oftentimes what comes up must come down. And you see that a lot of times with a bunch of craze, hype. Guys, the AI companies out there have zero, they don't make sense from a valuation perspective. We're seeing valuations that are in the billions without revenue coming through the door. That's all speculation. That's all hype. Hello, pay attention. That's all hype. There is no cash flows coming through the door or investors benefiting from this. This is assuming in the future, this will be worth more. And that's how prices are being determined right now. And with that comes a lot of innovation, a lot of new, a lot of crash and burn, most crash and burn. And we've seen it with the .com era. We've seen it with the marijuana industry. We've seen 73% of crypto projects were literal scams. And so there's a lot, whenever there's a new market of any sort and there's new entrants and there's limited, let's call it authority or limited guidance or rule sets or anything like that, you're going to have a lot of bad players enter that market to scam a lot of people. And that's what we've seen. We've seen literally 3 and 4 projects being scams noted to date. Like, put that into perspective. If you can't see right through that, you are just flat out dumb. And it's happening right in front of our face again, right this second as we speak. If you're putting 40% into crypto projects in your financial plan, I'm going to do a quote unquote there, because financial plan, that's funny to put something in there that has all speculation. And I'm not saying part of your financial plan can't be adding speculation to the mix. I think, in fact, it could be smart once you check a lot of fundamental boxes. But let's be honest, most of the people that are doing this, they don't even know what fundamentals are. They don't even have a clue. They probably don't have an emergency fund. They have credit card debt. They have no idea what they're doing. This is a hope and a prayer. This is, I hope I get rich. That's what this is. Let's call a spade a spade. And we're seeing it all the time. Now, when you position yourself accordingly and you have a good financial plan, and most people don't even know what a financial plan is, so let's break that down for a second. Now, I'm going to keep it real high level. We have an automation, let's call it an automated financial system, a money management machine. We know where every single dollar is going. We have a budget, we have a balance sheet, we have amortization schedules, we have a roadmap into where things are going. We have a cash flow understanding of everything that we have inside and out. On top of that, we have investment allocations, we have investment accounts, we've aligned those with our goals, we have risk meters on those different financial goals that we have timelines on those goals. We have tax diversification enters the mix. We have estate planning in this mix. We have insurances. We have tax planning. We have all of those things in this mix. And we know timelines of everything. We know timelines when we hit our goals, when we become millionaires, when we become financially free. All of those things are very clear cut. And the only way you can have a pretty vivid vision or a very clear vision with your financial plan is when you have actual assets that actually have done historical, stuff, not speculation. Not, I hope this does very well in the future. I hope this price goes up because other people bet the price will go up too. We actually have cash flowing assets and we have equity in those cash flowing assets. And we know exactly long term over let's call it 10, 15, 20 years, that it's probably going to do what historical context, returns have provided us. When you start to position yourself like that, and then you enter potentially some speculation into the mix as an additional upswing potentially, but also with understanding that could go to zero. And you're going to reach your financial goals so much quicker. Because what's the point of investing? It's to hit your financial goals. And I think a lot of people forget this, whether it be through greed, whether it be through lack of education, whether it be negligence. I don't know what it is. Everyone has a different reason. But a lot of novices get into this game and just think, I got to make a lot of money. I got to beat the market. I got to do all these things. And they forgot the whole purpose of their plan, which is literally to achieve the financial goals that you have. A lot of them don't have financial goals. They're just like, I want to get rich. It's like, that's not a financial goal. I got rich per se. We're well worth we're $2.6 million net worth at 32 years old right now. But we did it the right way. And we added some speculation in there. It's obviously bulked up the portfolio a little bit, but it hasn't created the financial goals that allowed us to achieve the financial goals that we were out to achieve. And so when you're first starting this game, we need to get really clear cut about what our goals are. Then we need to align assets. And let me be specific about that. Accounts within brokers like Vanguard, Fidelity, Schwab, so 401k, IRAs, brokerage accounts, HSAs, etc. You can list so many accounts, 529s for kids, etc. You put those investment accounts within those brokers, and then within those investment accounts, you select actual investments. And those investments should align with your timeline, your risk profile, your goals that you have for what you want to accomplish. And you can project that out pretty well. Obviously, there's no guarantee of what the market does at any given point in time. But if you look at any bit of historical context, with pretty good certainty that that's probably going to continue the same way, some shape or form. And you can build in plus or minus or standard deviation or whatever you want to add the potential for, hey, it doesn't work out exactly the way it's expected to work out. Instead of 8% returns, I'm assuming maybe I use 6 or maybe I use 5, really conservative. That's up to you. That's a whole nother conversation. But the idea of bringing crypto into the portfolio, especially at a 40% clip, which is absurd, to think that you're going to just get rich is not even the purpose of this conversation. It's literally the exact opposite of what you want to do. So there's going to be continual people online talking about this stuff, talking about the idea to get rich, and there's this desire for human nature that's the tale as old as time, that I can get rich quicker than you, and I don't need to go through the system, and there's a big revolt against the system in today's world, and I get that. But I want you to hit your financial goals. I don't want you to try to get rich through, fool's gold. And I say fool's gold because most of it is, and that's an undeniable fact. That's based on statistics. That's based on data in every single booming industry. Lots of these guys die. Lots of these guys fail. And when you buy a thematic ETF, an AI ETF, because AI is the future, you know how many guys in the ETF are going to die? It's obvious, right? And there's statistics to back this. Let's just bring up one pretty obvious, which is over a 20-year period, you have actively managed mutual funds versus index funds. 95% of the time, the index will outpace and beat the actively managed mutual funds after fees. So that expense ratio you're paying that actively managed mutual fund, you're probably going to lose to the index anyway. You have about as good of odds as a casino to beat them. That trend's not going to stop. That trend's going to be continually the same throughout the future. And whether people say, well, technology is going to speed it up and technology is going to beat the index. Plot twist. The index has technology. And in fact, it's a growing sector within the index. So at one point, it's obviously it was a lower at different times of history, but it's all the way up to 32%. And so if tech and AI and all these different companies rise to the top, plot twist, the index those companies will be replaced by these new technology companies, these new AI companies, and you will have exposure as a result. But you also don't have to bet on all the crap players that fizzle out, essentially, that fail. And the quicker you understand this in line with your goals and the understanding that you actually do have exposure to what your little allure or desire is, I think it's going to put you in your seat and make you realize that there's a bigger picture behind this whole entire thing. And the whole craze with Bitcoin and the whole craze with crypto is just another one of these things. Whether we're right or wrong about the actual crypto coin or about Bitcoin and specifically, like I said, I'm investing in Bitcoin. There's speculation involved. I think it will be the future, but I could be wrong, and I'm positioning myself as such. Please consider this message. This message is super important, especially in a day and age of social media, people just flooding the system of social media with just constant messages of like, you fiat bros are going to be broke, you financial advisors are going to be broke, and all this kind of stuff. A lot of people incorporate this in there in a much more intelligent way. And with the way they speak even shows me the level of maturity they're at. Calling me a fiat bro because I don't have 80% allocation to Bitcoin is just foolish. That comes from somebody in their mom's basement. 21-year-old, never got picked on the playground. I was the quarterback. They weren't. They never got picked. And they're mad at me because they look at me as that quarterback that once was. And, back in my day, they never were picked on the playground. And they're really upset at me that I'm continually getting richer and richer and richer the right way. And they just are gnawing and grabbing at me, trying to figure out a way to beat me. They just can't. They can't. They're going to continue to lose to me forever. And they'll catch on eventually, hopefully. I mean, some of those immature folks stay immature their whole life, but some do grow up, and maybe eventually I'll pick them. But there's a big cult-like following with this because of a lot of immaturity going on, and it's a lot of groupthink, in fact. I know there's a very small portion in the population that actually understand this world even, but you can see it online. A lot of guys have went online and have become part of this cult-like following. And if you think any other way, they'll tell you. That tells me instantly that this is a cult. That they can't even have conversations about this. They can't even understand my side of it. They can't even understand both sides of it. And like I said, the earlier they understand this concept, the probably better off they're going to be, but also the better off you're going to be. So I hope you take this message today and really apply this to your life, because again, you can still get exposure to all this stuff through the index, through quality ETFs, through great investing, and it naturally will become part of that with time. So applying that to your financial plan, hitting your financial goals is the ultimate goal behind what we do. That's why I do what I do, is so I can allow you to hit your financial goals. And I hope you guys take this message and run with it. Anyways, I will see you guys in the next episode.
You've been listening to Money on My Mind with your host, Brendan Schlagbaum. If you found value in today's discussion, share it with someone who could benefit from it too. Be sure to subscribe to the podcast if you haven't already, so you never miss a money mastery tip. Until next time, stay passionate about your financial journey and keep taking bold steps towards your money goals.